Hi everyone, this is the 2nd of October 2019. We've been through two very vicious days in the market, and this after the White Friday, that is the big up move that we got on the 20th of September, one that people will probably not forget, and it was an event worth noting. That said, after that, would you really have expected this very steep decline? I think a lot of people did, but the hard part is a lot of people are not thinking this is just another dip. They're thinking that this is the start of a crash. So I'm going to get into more of that with one housekeeping announcement that, after being asked a lot, I've probably managed to give some time to doing a limited group mentorship starting with December for 3 months every Saturday in Mumbai. So if you're in Mumbai or can be here and want to learn everything about how I do my trades, Elliott wave setups, trade setups, classical analysis, filters, and so on. Whatever I do, if you want the details, you see this number on the screen, get in touch and find out more, so that we'll be doing that for 3 months, December to March, I think, from that time period. So you have, so that's that. And so coming back to the market, what you ended up getting is a major panic reaction that should not have happened given the kind of recovery we had. And the way it has happened is what is really bothersome, because it has happened with a lot of rumors and news that is that didn't look justified on the face of it. And now all the companies have actually come out with clarifications. The media is full of it today, that none of it has really been true. So how it started is you first started getting a panic reaction in Yes Bank. Some people, some brokers heard that there's going to be a structural problem in banking. And I'm not sure. See, this is, for me, it's a joke because it's not new news. It's not that it becomes a structural problem when Yes Bank falls from 70 rupees to 35 rupees. Right? Give me a break. The stock's been falling from 400, 300, 200, 100, and we could see all the problems cropping up one after the other. So it was not a structural problem till it was 70. But suddenly when it falls sharply in 2 days, it's a structural problem. And partly of that selling, at least what the market says, is to do with, selling by the former CEOs being asked to move out. And if that's the case, if that proves to be true, then it's probably just because of someone making an exit rather than anything to do with the internals, which is why, the Yes Bank CEO has been in the papers for the last 2 days clarifying on its financials and future growth plans. And the other issue then, which cropped up, ended up being the Indiabulls case. That case also today, there's an ad in the newspapers, completely withdrawn. Most of the issues were not for true. And that doesn't mean that Indiabulls doesn't have its own problems. I mean, the stock's been underperforming for quite a while. And I would have my own opinion in terms of that. But what I'm really reflecting on is the underlying market behavior. So you have news that was not completely true. It creates panic, a lot of rumors that the banking system is falling apart. Companies like Indian Bank are told that, well, you might have a lot of exposure to Indiabulls. They come out and give a clarification in the media. And even after the clarification, when the stock was down 8-9%, the next day it falls another 8-9%, which is quite surprising because it broke the previous lows, something I was not anticipating. And that said, if the news is false, then why did the stock really fall? And I think one of the reasons why all this is happening has less to do with the so-called financial problems, which are still there. I mean, I'm not changing my economic winter theory long term. But that said, we've been through 18 months of selling a lot of these stocks which have been highly in debt, and their problems, they've all been rammed. ILFS today is in the news, Uday Kotak saying that, they are going to get 50% of the dues cleared by the end of the year. And so that's a lot of action happening on at least the cases that are already there. And so after a long bout of selling, it's always possible that things bounce back a bit, at least as far as the main market is concerned. And the government is actually taking steps to, try and help things stabilize. So what really happened is you had the mid-cap index sell off very sharply in the last 2 days, giving back almost 6%, I think, and going back to almost where you started, when the tax cuts were announced by the finance ministry. So, and that's the NSE midcap that gave back that much. The BSE midcap and Bank Nifty actually only retraced exactly 61%. So that's a good retracement back to the averages, which I would say is a very good support for it to start moving up once again. But the reason the broad market gave up so sharply might have to do with another news which was floating around a couple of weeks back. Palak Shah from Business Line ran it. And what he said is that there was almost a 1 lakh crore outstanding of, margin positions which were underfunded basically with brokers. So a lot of the funding is basically mid caps, and to the extent of 25,000 crores was underfunded, and so surely they would have asked clients to pitch in some of the funds, and whatever left over is there may have actually come in for selling because the deadline as per SEBI was 30th of September. So as I was reminded of that news, I thought that may have been the trigger. I don't really know, but 30th and 1st, if those 2 days we have seen maximum selling in mid caps suddenly out of the blue because mid caps were actually outperforming the Nifty at the start of the month, then I think the reason for that has to do more with what is an event again rather than anything that changed in the underlying. But the rumors really made it look like this is the end of the world. Now that said, the US markets were down yesterday on news that you have bad economic data. Now bad economic data has hit all over the world over the last 12 to 18 months. It's not new. It only hits the US late. US somehow has always been the laggard late in actually showing the same results. But now that it has, and every part of the world has, they're all moving in the same direction, which is every country is now cutting interest rates. Asia is cutting rates. China has been doing it. India has been doing it. So everybody is cutting rates. And one thing is clear from Europe, that even negative interest rates not really working on growth. And so they are all walking towards the next big thing. And I think India has been, in that sense, been among the first because we've actually gone with fiscal stimulus through these tax cuts. And even this weekend, Mrs. Sitaraman has announced that they're going to be going ahead with, asking PSUs or, government to actually pay back a lot of dues that were pending, to various other businesses that they do business with. And the idea here is basically to increase liquidity in the system, or at least to flow through the financial system so that things start moving. And the amounts are large, 20,000 crores, there's 1,40,000 crores prior to that. And if you, even though people may think there's going to be, oh, how will this help? It's a large amount of money that will move through and there will be some rub-off effect. So you cannot ignore that. And the next thing is the recent G7 meet. And what I'm reading is, the hedge funds and analysts are actually looking at the outcome of that as moving towards some kind of fiscal stimulation, starting with Europe. US may come in later, but the US is still only ranting about lowering interest rates. At least that's what Donald Trump keeps telling the Fed chair, Powell, to actually do is to, be stronger in terms of doing more rate cuts. But what we really will need at the end is fiscal stimuli. And I think if that starts with Europe, so they would start, doing the same kind of thing, spending, coming up with spending plans, and that would improve things there as well, at least in terms of the economy stabilizing from the situation that it is in right now. So with all this liquidity being thrown at the system is what makes these markets, despite all the negative economic cycle issues, that you could end up with a liquidity driven market move. And that's the reason why the negative extreme in sentiment that we've seen yesterday, which is almost as similar as it was on the 19th of September, just before the rate cuts, the tax cuts, you're feeling just the same way. Everything was just falling apart, even though world markets at that time were actually picking up on hopes. And now world markets are showing some weakness, but we are showing much more weakness, it looks like, because we barely picked up and then we are trying to give back everything, And so I think that negative extreme in sentiment is more to me a contrarian situation where you need to be more positive about it rather than, it's falling apart. So that's what I sensed, and I see it more as another similar situation as it was last week, and that too ahead of an event which is going to be RBI meeting in 2 days. The only thing in between, just like it was last time, 19th, every Thursday, ends up being an expiration, and expiry trades sometimes are more about managing exposures, and sometimes market just loses its volatility. Even on the 19th, it was actually down before the big move up, and so I wonder, even though it looks oversold yesterday, whether we get the move up tomorrow or at least we stabilize, and then because it's expiration, the following moves only happen after the policy. The question is, what will policy really do? And I would expect it to do more than just the 25 bips that everybody expects anyway, simply because there's no better opportunity and time than to front load it now, because you have the lowest inflation and growth data pouring in even in India, and you have this panic now created, probably gives them room to do more, if not just on rates, maybe some other kind of measures which I cannot imagine right now. But something more than what the market is really expecting is what I would expect from RBI 2 days from now. So let's see whether that actually turns out to be the case. Then it will be a second event that we will end up remembering in the course of things. But front loading makes sense given that you want to actually push things in a particular direction, the way the government is really making it sound out. So that's all from me in this update today. Thank you.